In this video, we're going to talk about, is it possible to be too cautious when trading? Stay tuned. Hey traders, a very warm welcome to you. Okay, so question from a viewer, a subscriber. Thank you very much. As always, send in your questions. Really love to hear what you have to say. All right, or any questions you have that we can cover in a video, they're also very, very welcome. Okay, so is it possible to be too cautious in trading? It most definitely is. And it's a fine line, right, guys, between, do we just swing in all the time and you're swinging around size and you're throwing in massive tickets and you're doing this, doing that, your P&L's swinging stupid amounts up and down, and then you're just doing nothing. You're not trading, you're trading small size. We want that sweet spot. We want the sweet spot of, yes, we want to make as much money as we can. Yes, we want to have as many profitable trades as we can, but we don't want the extreme emotional swings. We don't want to be just trading, putting all the effort in and getting no return from it. So let's look at some things. I've got 4 here for now that I see very, very often in traders that definitely means they're becoming too cautious with their trading. The first one is too much confirmation. Now, I know many of you are going to watch this and say, well, I've seen some videos from you talk about having confirmation here and here and here. And yes, we often as traders like to see confirmation for a trade. We like to see that something's been tagged and I want to see this and I want to see that and pull the trigger. But again, with all these kind of things in trading, it's the balance. If we're looking for, you're looking for this, you're probably never going to get it. If you need all these indicators to line up, plus this price action, plus this, plus time of day, plus that, you're never going to get it. You're never going to pull the trigger. You're never going to get the setup that you want. And also, an additional thing to look at that is that very, very often, if you're waiting for too long for confirmation, you're missing the very, very best trades because they won't give you all of the confirmation. You've got to have some non-negotiables. And I've done a video on this before where we said, hey, listen, you know what? You've got to have these where this has got to happen, i.e. trending market. We're buying a pullback. Trending market, good initial first drive. That's non-negotiable. Don't have that, I'm not taking the trade. And then we have nice to haves. And you can grade the trade accordingly. So you can say, okay, if I have 2 of these, it's a grade B. If I have 4, it's a grade A. And if I have all of them, it's a grade A. But I'm still going to take the trade. I'm just going to be aware, and perhaps my position size might be adjusted to suit. Perhaps we've got too many there. Perhaps we need to be just looking at 4. So, but the point is, this is making you too cautious. If you're waiting for all your ducks to line up, it's just never going to happen. All right, number 2, guys. Number 2 is waiting until it's too late. This is very common. We all do it. I'm almost guilty of it myself. I kind of feel myself, oh, this looks like a great trade. It's too late. You just feel it's too late. What do I mean? I mean that, I'll just get my cloth here. I mean that we wait until, these are pretty similar really, guys. Number 2 and number 3. Waiting until it's too late. Waiting until it looks so good it can't fail. But too late is really, hey, it's rocketed off. I've waited. Oh, it looks really good now. I'm going to buy it. And we talked about this chasing thing before, but this is a different way of looking at it. It's saying, hey, I'm so cautious. I didn't want to buy it when it was going lower. I didn't want to buy it when it was double bottoming. I wanted to buy it when, I felt that it looked really, really good. I wanted to wait until it looked so good that it couldn't fail. The trend was already going. It was going up. It looked like it had been going up for ages. And then pulling the trigger. And that is a more high risk trade, ironically, than kind of buying a first pullback, or if we had another double bottom here, then buying this, where you can quantify your risk. You can be very clear on it and say, well, as long as my risk is quantified, it doesn't matter what happens. Here, you feel it's really good because it's been an uptrend. Where do you put your stop? Do you put it here? Do you put it here? Do you put it here? Probably not. It just doesn't even work out as a good trade. And the irony of it is, generally, when you're waiting to see that it looks really, really good, really, really good, really great, is the worst time to buy it. And often you'll see, many traders as well are so comfortable with the trade, looks so good, they start boasting about their position. It's the time that it reverses. And again, I have talked about that point before. So the irony of being too cautious often means that you're actually taking on more risk because you're too late and the odds of it working have diminished significantly. Plus, the risk is harder to quantify. So you kind of get this yin and yang problem of pulling you, thinking, oh, I want to be cautious, I want to wait for this. But actually, when you look at it, it's not a great position to be in. Number 4 is never wanting to pull the trigger. I've met traders who never really want to make a trade. They do all the analysis, they do all this thing, they say they're going to do this and they never do it. They're going to do this, they never do it. They just don't want to pull the trigger. And it just is the one thing is that they're cautious because they fear loss. That's it. There's no reason you wouldn't pull that trigger. If it was a demo account, you pull the trigger. If it was a minimal amount of money, you'd pull the trigger. If you're not pulling the trigger, it's okay, 99% of the time, it's because you fear loss. 1% of the time is that you can't be bothered with it because the position size is so small and you're scared of doing a big size. That's a really, quite significant problem and quite unusual. But generally speaking, the reason that people don't pull the trigger is they fear loss. And the easiest way to get over that is just to accept the risk, accept the stop that you're using, accept it and say, hey, it doesn't matter where I pull the trigger. I don't need to be cautious or not. None of this matters where I pull the trigger in this trade, as long as my risk is managed. I can accept that. Yes, it matters from a point of view of the likelihood of the trade working, i.e. if we're chasing stuff, if we're fading brutal trends, if we're doing this, of course, we know that there are certain rules that we try and avoid because historically that's a bad thing for us to do. But ultimately, in terms of the damage it will do to your account, the one trade is not going to damage you if your risk is capped. So there's no reason to not pull the trigger. If you've got the risk capped, if you've got your strategy in place, you should just be pulling the trigger. So yes, it's very possible to be too cautious. It's a fine line between being too gung-ho and being too cautious. You want that happy medium. You want to press when you feel you've got an edge, and you want to step back when you feel that things aren't going so well. And listen, you're right to be cautious when your performance is poor. If your performance is poor, your equity is going lower, your trade loss rate is high, by all means activate caution mode and don't take stuff. But in the normal aspect, normal day-to-day trading under normal conditions, if you're finding yourself waiting for too much confirmation, I want to see this, I want to see that as well. That's the biggest one, by the way, guys. And I see that very, very often with traders. And stick a comment in the comment section below if that's you. That really needs something to address. These 2 and 3 together, waiting until it's too late, it's kind of similar, but you want to see more. I just want to see more. I want to see more. Confirmation is more like I want this indicator, that indicator, that indicator, that indicator all lining up. Wait until it's too late. It's like I just want to see the price do a little bit more, Again, this doesn't make any sense. Number 4, never wanting to pull the trigger. A distinct problem that happens when people just really are fearful of loss. And we've got to kind of get over that fear of loss, accept it, know that it will happen, say I'm losing this, this is going to lose, I'm going to lose this, and just rolling through the process. So hopefully, you can get to the point where you can pull the trigger and not fear it, because there is nothing to fear because you've already quantified the loss, the maximum loss that you can have on that trade realistically. There might be some outliers, but generally speaking, that's all you can control as traders, guys, is your risk. All right, any more? Comment section below. Take care, see you next one. Goodbye.